So we got Q2 numbers from Adobe last week. They aren't in the kind of 35 odd SaaS companies that we track, or at least they weren't in the Q1 report. I'm going to add them into the report for Q2. And Q2 numbers, pretty impressive. So Adobe's at 22.5 billion in ARR right now. That ARR grew 11% year over year. So they added about $2.3 billion in net new ARR over the last 12 months. 632 million of that came in Q2. So pretty good growth for them considering the run rate that they're at, right? Growing 11% when you're north of 20 billion in ARR is really impressive. They've got exceptional gross margins. So this really jumped out at me, right? Gross margin for the quarter came in at just under 93%, which is insane. The median for the companies that we tracked in Q1 was just 78%. I think there are only two companies that we looked at. I think it's maybe Asana and Monday that sit at about 90%. So Adobe really in a class of its own there in terms of gross margins. They spend about 18% of revenue on R&D, 28% on sales and marketing. So they had total sales and marketing spend for the quarter of 1.6 billion. CAC payback came in at 31 months for the quarter. So that's pretty good, right? Pretty good for a company, again, at a later stage. We typically see as these companies get more mature, right? More of that sales and marketing budget is probably spent on retention. Much harder to go out and generate kind of like net new ARR year after year. And so the fact that they're at 31 months there is pretty good. They've got a 37% free cash flow margin in Q2, 36% operating margins, which is outstanding. $708,000 in ARR per employee, so really efficient, and RPO of just under $20 billion at this point. So pretty good quarter, right, for Adobe. They're trading at a market cap of about 160 billion, which is about 7 times ARR right now.